Professor Pinquet from the University of Paris-Nanterre is going to show us a paper concerning experience rating and point record driving licenses in automobile insurance. Thank you. Yes, you want to
switch here. Okay. So goodbye goodbye, good morning to everybody. I first just want to answer to the last point proposed by Professor Fang. How can you subsidize young drivers? So you can enforce, as said Professor Cesari, you have the premium of your parents. You can put explicit contract, but there is also the solution of implicit contracts. It's because a mutual or insurance company that has a low turnover is easy for this company to subsidize, young drivers, and that's the case for my mutual for teachers. There is a 3% turnover, very low, and it's easy. So implicit contract versus explicit contract is like Hobbes versus Rousseau. Hobbes is Anglo-Saxon and Rousseau is Franco-Swiss. And so you have these two solutions, but you must have a low turnover in order to do that. That's it. So, okay, so it's in my mails. And so I will talk about accidents, road accidents, because experience rating is based on road accidents. I will also discuss bonus-malus scales that was treated in the welcome address because they are also based on road accidents. And I will talk about point record driving licenses, which are based on traffic violations. And I will mainly stress the difference between traffic violations and road accidents in terms of frequency, for instance. And so the outline of my presentation, yes, I shouldn't have it line by line, it's a bit. I will talk about the two different futures of road accidents and traffic violations in terms of frequency, for instance. Then I will, a short dynamic of insurance data is a revelation modification effects, and it's important, when you work on panel data, it's important to disentangle these two effects. I will talk about future of point record driving licenses, in a framework where all your traffic violations should be known by the road authorities if your car is connected to the internet. What would happen in this case? Then I will mention the role of bonus-malus scales, and I will mention a recent research of mine, memory in non-life insurance data, but I only will mention it will be the end of my presentations, and there are a lot of mathematics that I will not show. So if I talk of a road accident and traffic violation, you know that the frequency of traffic violations has increased with the deployment of radars, and it could increase dramatically if the cars was connected to the internet in real time. I don't know if it's enforceable easily, I guess with a smartphone, and some people in the audience know this better than me, but I will talk about this later. And meanwhile, the frequency of road accidents has decreased, mainly in the 17s, 18s, 19s. Now it's more stable, I guess, but and so if you want to oppose traffic violations and road accidents, traffic violations, they have short memory, at least in the point record mechanism, because the redemption comes after 2 or 3 years. Predictive ability is not so bad. From my experience, traffic violations have a good predictive ability on the road accidents. But potential high frequency if the car was connected to the internet, and the incentive effects are paramount. And this is, of course, a great difference between automobile insurance and health, because there's always control. You control your risk in automobile insurance. In health, it's your health status, which is based on the health capital, and the depletion of this capital is mainly irreversible. It's the peau de chagrin of Honoré de Balzac, So that's it. And so road accidents, you have long memories, for sure, you have a low frequency, and the revelation interpretation comes first. It was the mathematical models of credibility, mixing, demixing. It's a story of revelation. So I just will mention the revelation effect. So it's unobserved heterogeneities with Bayesian mixing and demixing. Revelation effects that are not intrinsic. The more you have information, the less the history can reveal of your unknown features in risk. So it's a big data issue. And of course, it's a bonus-malus story. So the frequency risk level increases with an event, accident or traffic violations, and it decreases with time. And it's different when you consider modification story, whether there are incentives or psychological effects. You can have effects on both sides. It can supplement and also counteract these revelation effects. So if I talk about modification effects, you have psychological effects, availability bias and gambler's fallacy. For instance, gambler's fallacy means you have a recorded traffic violation and you say, well, I wasn't lucky, but now I'm quiet for some time. And so you make less effort, your risk increase, and so it supplements the revelation effect. And availability bias is a longer sentence from, I guess, Kahneman and Tversky. You say, these bloody radars, yes, they are here. And so you pay more attention and you are less risky, and this counteracts the revelation effect. Incentive effects of what is homo economicus. It's good for the academics because, they like to mathematics. So Hamilton, Jacobi, Bellman, it's a stochastic control. And I will mention these two words, stochastic and control, when I talk about the point record driving licenses. So now I will talk about the incentive effects of point record driving licenses. One thing is sure, when you have, when you get closer to the atomic bomb of license deprivation, you will make more effort. So it's very easy to prove, and I wrote a paper with Pierre Picard and Georges Dion, but it's rather obvious. Your effort increases. And when empirically I work on data with Georges Dion on data from Quebec, you see that accident risk increase first with the first demerit points, and then it decreases. So it means that at the beginning, the revelation effect is more important, but when the threat of license deprivation gets closer, then you make very much effort, and this is stronger than the revelation effects, and things are reversed. And yes, this is discussed a few slides ahead. So I think that these two slides are about point record driving. Big Brother, I mean that the eye is in your car. Your car is connected to the internet, and the road traffic authorities know all about you. I don't know at which horizon this is, but I just thought of it, and I want to give a discussion on this. So I think that the information asymmetry collapses because today traffic violations are recorded by radars, but fortunately, or not, only a tiny proportion is recorded. So that's it. Stochastic control, with a low frequency environment, it's the stochastic word that is important because your effort to careful driving are blurred by the random nature of the result. But if you have all your violations are recorded, it's the control that will become paramount. You will have, of course, a much more important capital of demerit points. In France, it's 12. Of course, all your violations are recorded. It will be, I don't know, hundreds of thousands, and you really will control your capital in this case. And redemption clauses also, in France, and I guess it's the same in Italy, you need a violation-free period to have your demerit points. They are all suppressed. In France, for instance, it's 6 months for mild traffic violations, 2 years for medium traffic violations, and 3 years for severe traffic violations. But if your violations are recorded all the time, you obviously cannot do that. And so you will have to do like in the Anglo-Saxon world, where each traffic violation is redeemed after, once it crosses a given threshold of 2 or 3 years. We won't have choice to follow the Anglo-Saxon world. And I guess, in my opinion, the seniority that triggers the redemption should be reduced. 1 year should be more than enough. If you use your cars, with a seasonal use, 1 year can go below 1 year, but 1 year would be more than enough. Yes, and the last slide on the point record driving license is about the point of risk exposure, because today, with a low frequency and a tiny proportion of traffic violations recorded, they are very detrimental for drivers who have an intensive use of a car. I give an example. You do not use a car to commute, suppose. And one day you change your job and you have to use your car for daily commuting. So you will expose yourself. Maybe you drive twice more kilometers. But the risk of a license deprivation will not be multiplied by 2. It will be multiplied by 8 or 10. It's easy to see with the Markov chain. So in terms of elasticity, this elasticity is much greater than 1. So the risk of your license deprivation per kilometer increases. And another point that supplements this is that your private value of a license deprivation increases. If you have to use your car for daily commuting and you lose your driving license, you lose your job. If you only use your car to go to holidays, it's not that. So I think this would be an upside of Big Brother environment. You could integrate risk exposure in the point record driving license. That's my opinion. Yes. Now, I talk about the incentive effects of experience rating and bonus malus scales. So the incentive, the increase when you have a convex structure of rating in automobile insurance, which more or less the case, but not always. And if you think of because I will talk later of bonus malus scales, they do not enforce experience rating. Usually the authority, I guess the IVASS, you have a coefficient. In France, we say coefficient de réduction majoration, which is applied to a premium, but the private insurers are allowed to do experience rating on this premium. So they do not enforce it. And so the incentive properties are not clear-cut. So it's not the role of, that's what I want to stress, it's not the role of a bonus malus scale. It's not that much the incentive, it's rather to provide information which is common to all the competitors of a market. So it means that the goal of the role of a bonus malus scale is to reduce the information rents owned by the insurers, the incumbent insurers on their policyholders. And this is discussed, I guess, in this slide also. And for instance, there is a case of France. I think yes, that's it. 20 years ago, France was sued by the European Commission. Very liberal, and they say yes, but your bonus malus, it's a constraint on the rating structure. And for this reason that I said, France won the case against the European Commission because it's not true. And so, that was given, of course, in the welcome address. The bonus malus scale are unbalanced. So the drivers cluster at the lowest scale. That's true in all the world. And this has implications on the information role of bonus malus scales. I think that the efficiency of this bonus malus scale increases during the 10 or 13 first years, and then it decreases. You have more information 10 years after, for a 10-year seniority of a driver than for a driver who has 20 or 30 years seniority. And that's strange. And of course, that could be modified easily. You just add supplementary levels, below the flow. It's very easy. And the rating that is proposed, actually, it does not matter because it does not enforce the rating. But there is upside, and that was somebody talked about the switching cost versus competition, and that's it. That is the upside and downside. So it's a point that was mentioned in the discussion. If you reduce the information runs, if you improve your bonus malus scale with more levels, you will reduce the information runs. You will decrease the informational barriers to entry. So more competition, but also more switching costs. And so there is a trade-off. And I'm not here to, of course, it would be, if you do this would be detrimental to, it must be written somewhere, that's it. This would be detrimental to well-established insurance company, like my insurance company, for instance, with a 3% turnover, and which has a huge information run on myself. And I will explain this later. So there is a trade-off, actually. And now, there's 16 slides. So the informational contents now of individual histories. So that's my research. I like experience rating from the mathematical side. There are no mathematics, but in my papers you will find stationary processes, spectral densities, even duality in topological groups. But you will know, but you will avoid this. Okay. That's it. A brief case from, my name is Jean Pinquet. So I have more than 40 years as a policyholder in the same mutual with 0 claim at fault. And what is my reward for this? I have a reduction majoration, of course, the minimum 0.5, so 50% bonus. But the average policyholders, the senior policyholders like me, they have 40% bonus. So I have not 15% discount. Of course, I deserve more than that. So that was the motivation to undertake research on this topic. But you can have an answer, of course, it is well known by actuaries, it's by the derivation of credibility weights. And in my recent papers, I have introduced the seniority of claims in credibility derivations. And of course, the answer is information rent. As my insurance company has an information rent, and I strongly subsidize the new policyholders, but not only the new policyholders. And so just a few words about my research. Yes, I remember the information flow in the frequency risk model. When you put mathematics on the revelation effects, there are two components. There is a frequency component of claims, and there is the weight of unobserved heterogeneity, which is usually summarized by the variance of a random effect. And what I have done in my research, my recent research, is to replace a time invariant random effect by a dynamic and stationary random effect, to grasp the seniority effect, because it's obvious that the seniority of your claims, the predictive ability of your claim decreases with the seniority. And if you want to put this in a mathematical model, you can do this, but there's a little effort to do. And and I like the semi-parametric approach, and so the credibility predictor that says, Bullman, Straub, and so on. And this is a favorite topic of mine. So predictive ability decreases with seniority, and I guess I will show you a few figures on the next slide. Right. It is easy if you use a semi-parametric approach. You can also do this with a fully specified model, but then the derivations, computations become very intricate. And I am very lazy, so that's it. So I think at the end of the slide, there is that's it. So at the beginning, you have a variance of a random effect on the panel data, and so you have a sum, of a number of claims and a frequency premium. So you can disentangle with respect to the lag. And if you do this, you usually see something like this. It is drawn from a Spanish database. It was the first publication in Aston Bulletin, but I have made other publications. So, this is zero lag, and it's a short-term effect. It's very strong, because it means that, for instance, your premium should double if you more than double after a claim, but just a short-term effect. And then it decreases, And it's fun and interesting, because there are unconstrained estimators. There is no constraint at all, and you see this. And usually on real data, you always will see a globally decreasing shape, not exactly decreasing, but you will see this. You will see the decrease of the predictive ability of the claims with the seniority. That's it. So if you use the seniority with respect to a classic actuarial model with a time invariant random effect, you will decrease the weight of the memories, and so the weight of a bonus, credibility. But however, of course, I deserve much more than the 50% discount. I will not give you figures like given in the, and so it means that the information rent of my incumbent mutual is very important. And if you want to rank, by length of memory in the automobile insurance world, the bonus malus scales have the lowest memory due to this clustering of senior drivers at the flow. Then you have real-world rating structures, more memory, but there is the information rent, and so the senior policyholders, they subsidize the other, and the frequency premiums derived by statistical model have the longest memory. And so just a word, I think this is the last, before the scary mathematics, but you are not familiar. I just mentioned a recent research of mine, which can be found by papers on my ResearchGate, for instance, my ResearchGate page. So the question, when you do linear credibility, it's affine prediction. And of course, you must have positive affine predictors. And that's not so obvious. If you use dynamic random effects, you must have positivity properties on the autocovariance function. Stationary, it means an autocovariance function. And so I have written mathematics about what are the conditions that ensure the positivity of the affine predictors. And also, this autocovariance function applies to random effects, which must be positive. And so I have completely solved this problem now. I needed 4 papers to do this, but now it's done. So, but of course, you will not see the mathematics. These slides which I will not show, they will provide more detail, and you have references to my research on this topic. And so, thank you for your attention.
We have a discussant. Agostino, please.
You hear me? Yes. Thank you, Jen, for your presentation. I think that your work is a good starting point for innovation in rate making of motor vehicle liability. Excuse me. Thank you. Yes. Just a short summary. The aim of your work is to investigate whether the point record driving license would improve the experience rating in automobile insurance. Statistic analysis of a panel of non-life insurance data has been used to investigate the claims process. And your main finding is that the claims process has long memory. So the predictive ability of the accident decreases with the lag. Well, now we see an Italian example of point records driving license. So in Italian system, the entry level is of 20 points, and we have a maximum level of 30 points. A driver has a gain of 2 points for 2 years without violation. So now we consider 2 different drivers, and we have the driver A that has no violation, and the driver B has only a violation in the first year with a penalty of 5 points. So this violation has a memory of 18 years. In this situation, if the insurers use the points records of the driving license, for 18 years, driver B pays a higher premium for 18 years. It's very punitive, this system. Just some comments. About policy relevance, point record driving license could be an incentive to careful driving. Data of public authority about violation are necessary. It is necessary to evaluate the link between violation and the claim frequency. About skill, the actuaries of insurance company should be developed by new techniques for rate making. So we have 2 questions. Do we want that insurers using traffic violation for rate making? And if yes, do we want that rate making is based on point record or on entire story? We have some benefit and some downside. About benefit, we have reduction information of asymmetry, because the insurance premium could be calculated using the driver's behavior. We have reduction barriers to entry. New policyholder could have an history of driving. And the rating structure could move from a priori variable, that is bonus malus, to, from posteriori variable, that is bonus malus, to a priori variable, that is the point record of traffic violation. About downside, in Italy, we have that many traffic violations are not recorded. And if an insured opens a claims without call the police, the violation is not recorded. And the last, public big data are necessary and they need available for insurers that make the rate using point record. I have just some suggestion for you. And I think that it could be useful to provide more empirical evidence about the trend of recorded traffic violation, the relation between traffic violation and claims, and the point record driving license can explain the history of a policyholder. Thank you, Jen.
Thank you. Can I answer to the last slide? Because this is, you can see this in our research with Sergio Dion. For instance, the trend of recorded traffic violation is given in our publication in the Review of Economics and Statistics on traffic violations. The relation between the predictive ability of traffic violations on claims. We did it in I think it's this paper or another, maybe a report for the at the time I was working for Canada, for Quebec, and we did this. And of course, yes, it's good. It's of course positive correlation. It's rather high, yes. But I have results on these issues.
Okay, it could be interesting measure this correlation on Italian data.
Sure. Of course, I could do this with Quebec because there is a public authority which collects. It's a monopoly also of insurance. That was the point. But VISAC, the Société de l'Assurance Automobile du Québec, is a monopoly for, I don't know, say third-party liability, for a component of car insurance, and they manage, the point record driving license. So they had a beautiful database, and we could link, the two. It's not, of course, available in other countries. Okay.
Thank you very much.
Antonio De Pascalis, Head of Research, IVASS Research Department. Compliments for your paper, very interesting for our works, for our reform. Just a question. The system depends on the intensity and the severity of the police control and to check the violation. Do you think that in France is the same throughout the national territory?
Are you talking about the traffic violations, the demerit point system, or road accident bonus malus?
No, the traffic violations.
Traffic violations. I didn't know the Italian system, but from your comments, I understand that they are very different. in France, you have a short memory. Huh? It's not the case in Italy, I guess, huh? From what you said. In France, all the demerit points are redeemed after a given violation-free period. And you must have, otherwise you go to hell. And you have, you know, so the systems are different, and I could not give an answer. Who is the best system? I think, in my opinion, short memory is good because it's the incentive effect that matters. And incentives usually they work with rather a short memory. It's my opinion. It would be my answer, just a rough answer.
System is homogeneous over the France of the territory.
Yeah, sure,
okay.
sure.
Because we have some differences.
Okay,
in
provinces.
the north.
Okay.
Thank you. Any other? Yes, please. Two people there.
Excuse me, what about if the owner of the car is a policyholder, but he has not a driving license? Thank you.
How do we treat this in France? But you mean from the accident point of view, or traffic violation? Accident point of view, there is the third-party liability risk is insured, and because when you pay an insurance premium, there is a tiny part of this premium that goes to a fund that you know subsidize that pays for the victims of an uninsured driver. I don't know if this is the point, but no.
The point concerns the fact that in some cases the owner of the car is not the driver.
Yes. Okay. And what happens there for?
I have a driving license, but I have not a car.
Oh, yeah. Okay. Okay. And then yes, I'm not sure of the answer. Sorry. Okay.
In this case, how your system could work?
Yes. Yes, I have to think about it.
Buongiorno, io sono Sergio Tusa, rappresento Telematics Service Provider Association. Traffic violation, I think, is a really delicate, sensitive point. I think we have to distinguish between certain traffic violation that can be only acquired by public authorities and traffic violation that could be also acquired by telematics app hardware. I know that France is one of the less populated in telematics on vehicles. So I understand that this, of course, cannot be a way to use the telematics to distinguish the traffic violation and to help insurances in tariff. At the same time, I don't think that telematics could be really the right way to notify traffic violation to the public authorities, because otherwise we transform system that is used for other kind of things for the insurances, also for driving behavior, for tariff and whatever, for claims, for crash, for e-call, for b-call, and so on, in a very dangerous, let me say, solution, which nobody wants to use.
You mean the Big Brother solution? That's it. That's, okay. So there is no privacy. You mean yes, but you keep your privacy. It's a private insurer, but the privacy is lost if it's a public authority. That's what you mean. It's
a good conflict, I think.
Okay. Right. It's a yes. Could it? Yes. It may be a okay. So it's a political answer. Yes. You may. I don't know, but as I said, I did not follow. I know this telematic insurance, but is it technically possible that, and it's a question that I asked to you, is it technically possible that in not too distant future, the road authorities have the same telematic device than the private insurers? I don't know. Is it technically possible?
Technically,
It's possible to do a bit proper solution.
Of course, it's possible.
Okay.
You. Other questions? Okay. Switch to Professor Constantinescu. She has a paper concerning bonus-malus systems with Weibull distribution claim severities. Please, thank you.
Thank you. Good morning, everyone. I'm going to present some joint work with, thank you, Tănase Pandelus at Monash University and Wei Hong Ni at Arcadia University, which is around bonus-malus systems with claim severities taking into account for providing a mechanism for fairer premiums. So as we all know, the car insurance variables that we consider are a priori gender, age, type and use of car and country, and a posteriori deductibles, credibility and bonus-malus. We use bonus-malus to answer the heterogeneity of the driver's behavior. We think to induce driving more carefully, not necessarily, and we abide by the regulatory environment. I want to ask the audience by a show of hands, which one of you think that women are safer drivers? The three women, one more time the question. Which one of you think that women are safer drivers? Okay, so at the first round were the three women in the room. Now are five. So as we know, 10 years ago, the EU regulations introduced the gender-neutral pricing for insurance, which means that the same price has to be charged for insurance products, regardless of gender. So my advocacy for today is that by introducing claim severity in the bonus-malus system, we eventually reach a fairer premium for women, which should be lower than men. Because as we know, statistically, we agree that statistically women are safer drivers, but indeed they should pay accordingly to their real risk. And that should be calculated objectively. So again, based on vehicle type and age and how much they drive and how many accidents they had. However, we have observed that statistically women have the same number of accidents or similarly, but they have lower severity in their accidents. So going back to the traditional bonus-malus system that includes only number of claims, so only frequency, we charge the same, we have the same penalty for an accident regardless if it's a small size or a large size. So if we look at the net premium, that is the expected value of the frequency times the expected value of the severity. We keep the severity, expected value of severity constant, and we adjust the premium only based on the number. I will keep talking about optimal bonus-malus, where optimal means with respect to minimizing the insurer risk, not the insured. So as I mentioned, I would advocate for a bonus-malus that is designed to include both the number and the size of the losses. And again, from an optimal point of view of the insurer risk. In the literature, there are a few papers that already considered severity of claims. One is from 76 of Picard that consider large or small claims, so you have a threshold and above or below, or in the book of Lemaire from 1995, there is the property damage versus badly injured. This is used in South Korea. There is a paper also of Peter Bois and co-authors where they have 4 times in a Dirichlet distributions. So before our paper that considers claim severity, there is a paper of Frangos and Brontos that consider these claim severities as following a Pareto distribution. There is a paper of Valdez and Fries that consider Burr long tail distribution for severity. And we have then considered a Weibull distribution and a combination of Weibull and Pareto. So going back to just claim frequency, I will show in an example how we thought of it and how we similarly applied the method for introducing severity. So this example is from Jean Lemaire, one of Jean Lemaire's presentation at the spring school in Liverpool. So imagine that we have a third-party liability insurance company who has 100,974 policyholders. After a year, 96,978 of them had no claims, and then 9,240 had 1 claim, and so on, you see on the slides. Now, if I would calculate the mean and variance of this data, they will be 10%. And being equal, we would think that a Poisson would fit the data. Fitting a Poisson with 0-10 mean would give us this column off. And we can see it's not the best fit. However, a negative binomial would be, but what kind of negative binomial? Oops. So we will choose the negative binomial via a Bayesian approach, the relevance method, as Professor Pinquet called it. So we will want that each individual has claims arriving according to a Poisson with a parameter lambda. But this lambda varies dynamically. So if this parameter lambda follows a gamma distribution, then the resulting distribution of a Poisson mixed with a gamma will be the negative binomial. What will be captured by this mixing, or what will be introduced by this mixing, is a positive dependence between claims, which makes sense in the context. Now, mathematically, how we have a Poisson, and lambda now follows a gamma distribution. When we integrate, we obtain the density of a negative binomial. Now, the Bayesian approach will move from a gamma to a different gamma, to another gamma, because they are prior conjugate, gamma is a prior conjugate. The only difference will be that the initial mean of the gamma and of the number of claims is alpha over tau, so the ratio of the parameters of the gamma, and a posteriori will be alpha plus k over tau plus t, where k is the sum of K1, K2, KT, where K1 is the number of claims in the period 1, K2 in the number of claims in the period 2, and so on. So total capital K is the total number of claims in the period T. So that's how dynamically we readjust the how much we charge based on frequency. So now the premium change from alpha over tau times whatever the severity was to alpha plus k over tau plus t times the same severity. So that would be the traditional bonus malus only with claims number into account. Now, when I want to introduce claim severities, I reduce to 3 possible distributions. Exponential distribution, which is very used in insurance mathematics, but usually describes well small claims. And then 2 heavier-tailed one, Weibull and Pareto. To obtain a Pareto, as in Frangos and Vrontos, the same Bayesian idea and mixing idea is implemented. So I have an exponential distribution, and now the average is 1 over theta. So I have an exponential distribution with parameter theta, the average will be 1 over theta. So if I want theta to be gamma, 1 over theta will be inverse gamma. So I mix over theta with an inverse gamma, and I obtain a Pareto. Now, inverse gamma, the same way, after a Bayesian approach, stays inverse gamma, and the same idea stays the same. I start with a mean of m over s minus 1, that's for inverse gamma, and I end up after the observing and taking into account all the observation over t periods, is m plus m over s plus k minus 1, where m now, m is the sum of total claims over, not the number, is the size, and k, it's still in the denominator is still the total number of claims. So as we know, the net premium now in an optimal bonus malus, optimal because the Bayesian will keep it optimal, will be, when I have both negative binomial and Pareto, will be dynamically adjusted after t as alpha plus k over tau plus t for the negative binomial, and m plus m over s plus k minus 1 for the severity. Now, in order to obtain a Weibull, that's a bit more interesting. That's not as trivial, I would say, as obtaining a Pareto where you mix with a gamma. We have to mix with a bit less known distribution, maybe with the so-called Levy distribution, and which is this one right here. And the result, mixing them, is a Weibull. When we apply the Bayesian rule, the a posteriori distribution is not Levy anymore. It doesn't even have a name, but it's the one right here. We can name it as we want, but this distribution now involves Bessel functions, but still involves m, the total size of the claims over the period, and the total number of claims over the period. And the expected value of a posteriori looks a bit more complicated, but still can be calculated. So as an observation in this case, we wanted to include the case m equals 0, so when we have no claims in this period, just because at 0, this otherwise will be undefined. So that will be the optimal net premium if we have a bonus malus that adjusted for both frequency and severity. Now, on a numerical illustration, what will happen with severities? We took a very small data set from the book of Klachman, Penger, and Wilmot, which had only 250 data points and was from a Danish fire from a long time ago. And the fitting was, of course, the exponential didn't fit well, but Weibull and Pareto did fit quite well. Maybe Weibull better at for the smaller size of the claims, and Pareto for the larger. And when we were to check the premiums, we have seen that using Weibull models, the total premium was consistently lower than when using a Pareto. And in order to do it, we have to impose m, the only way we could do it was that the total number of claims to be fixed. So that was for our purposes. Now, we thought from empirically observing what happened that maybe even better method will be a sort of a mixed or a hybrid of the two models where we set a threshold and everything below the threshold to be modeled with a Weibull and anything above the threshold in terms of severity to be modeled with a Pareto. And then the premium, in addition to, will have to have with probability Q, which means to be above the threshold, I will use Pareto. If I'm under the threshold, I will use Weibull. So X Weibull is where the claims severity follows a Weibull. X Pareto is when the claim severity follows a Pareto. And N Weibull and N Pareto are actually still negative binomials, because if the total claim frequency is negative binomial, by putting a threshold Z, what's above and below with probability Q will follow a negative binomial, but now with parameters alpha and tau times Q, or alpha and tau times 1 minus Q. So, and the net premium formula, if I want to write it with everything that we know, with the negative binomial and, negative binomial, Pareto, Q, 1 minus Q, and Weibull, that's how it looked like. So in conclusion, I believe that using the Bayesian rule, the revelation rule, it's the fairest and financially balanced. So these are the advantages. The disadvantages is that by using the Bayesian rule, the premiums are very high. So it'll be high penalties. And having high penalties will encourage uninsured driver, hit and run, and changing of the insurers. So as we know, to replace this Bayesian negative binomial, in practice, we use Markov chain for the classes. So something similar should be considered for the case where we introduce severities now, where I hope will happen today. Thank you for your attention. These are the details of the two papers I presented.
Thank you, Corina. Sergio Desantis as discussant.
Yes, good morning. Thank you, Corina. Thank you, everybody. I have to say it has been a very good pleasure to read your paper. Maybe if I can use the slides, I can follow. Okay. Right. Many papers in literature try to include the severity in the penalization of an insured. Your effort has been particularly appreciated because you didn't have much data, and I will show you. We have with a large portfolio, we have simulated your distribution using Italian data, and the results are pretty good. I think only Korea, in a very slight way, use average claims cost in the penalization of any accident. So it's the question. I think is very appreciated because if you just scratch the car, you get the same penalties if you have a very big, large bodily injury claims. So your approach that tries to differentiate the entity and the quantity of the claims has been particularly appreciated. And I found particularly interesting also the fact that you try to follow the insured through the time. So if a driver has an accident and costs one claim of X euro, then you have to follow this accident, this driver in the second year, in the third year, on an accumulated basis. So also this is very useful. Also in the paper, you mentioned the possibility of somehow diminishing the bonus hunger, which is also, it might be a problem. I think in every system, when there is an accident, people tend to avoid to be penalized. In Italy, I will show also you some numbers. When there are small claims, there is a tendency of paying the claim himself. So I don't get penalized. What's the problem in this case? That the insurance company loses a little bit the information on the claims history, particularly if the insured change company. So using the claims cost as in the simulation you have prepared, you have a system that provides a very low entrance premium and then punishes much more for the very few large claims size. And the authors in the paper encourage to offer a mild treatment for policyholder with many small claims, and this will discourage the hunger for bonus. Now, I mean, in theory, everything is very nice, but then you have to put in practice. So if you consider the claims cost and you have to wait until the very last euro has been paid, it would take, as you know, in modo third party liability, the length in the definition of the claim, particularly with bodily injury, can be very long. So you might observe that we might use the claims reserves, but here again, it depends how the insurance company opened the claim. So, you know, in some cases, the assessment of the loss at the initial step is often unreliable. So you have to wait maybe many years before the real claims cost is assessed. Secondly, in Italy, we would like to have a system that the insurance companies can use also to underwrite the risk in order also to make the insurers moving within the market. And since this approach on your paper goes on an accumulated basis, this means that if the insurers move to from company A to company B has to know what has been paid for his claim previously. This also might have some problems also for antitrust, from the antitrust point of view, because the insurance company who is accepting the insured must know what has been previously liquidated in terms of claims. The third thing that I noticed is that since your methodology is using clearly either the Pareto or the Weibull, so it's a continuous variable, it's difficult to tell the insured, oh, if you will have an accident, you will end up paying X. It's impossible. You will know only after. And this also might be, because if I'm a driver, I would like to know a priori how will get penalized if I will have an accident. In this case, it's a bit losing the point. What you have a very good example in your paper. Basically, you follow the insured through the years. So the entrance level, in your case, you have the entrance level of the premium is £360 because you use the pounds. Then in year one, this driver has an accident of £7,500, and the premium increased from 360 to 2,624, which is a big jump. So it's basically your premium is multiplied by 7 times. And this is a little bit discouraging because obviously your system is in equilibrium, but you are penalizing a lot who has an accident. The other thing is, when you follow the claim, imagine the second year, you have another accident. So your premium, as in your example, your second accident is £2,500. So the total accumulated loss is £10,000. Your premium increase of an additional 13%. And if you follow in 6 years, basically the insured has paid by himself the claim, which is maybe a little bit of more mutualization and subsidy between the insureds would be beneficial. I liked a lot, this is another striking numerical results. Basically, if in 1 year you have 5 small property damages and you have £7,500 of loss, your premium is more or less like 1 medium-sized bodily injury claim, which is good because this diminishes the hunger for bonus, which I found quite interesting result. I want to show you 2 numbers. Actually, we might collaborate in the future, and we might try to use the Italian data. Regarding the bonus hunger, in Italy we have, okay, this is 2020 and 2021 have been affected by COVID, as everywhere. So we have the one in 2021, we had 1.5 million claims in the gray bar. The request for, this is data from our clearinghouse that treats the direct reimbursement claims. We had the request of 1,074,000 people trying to pay by themselves the claim, but only 22,000 have been actually allowed. So basically we are talking about 1.5% of the total claims, which is, it's not a huge number. I mean, it's not very relevant, I would say. I have the same table. I didn't know that you were presenting the table, but I have the same table for the Italian case. As you can see, only very, very few people have more than one claim in 1 year. 0.1% of the number insured vehicles have more than one claim, and the percentage basically goes almost to 0 after 2. The good results. It has been for us a good effort. We try to see how good the Weibull distribution approximate the Italian data, and we get very similar results. The shape parameter is very similar from what you have found. In your paper, you have a shape parameter of 0.5. We have very close shape parameter is for the Italian data 0.65. And also the scale parameter in your paper is 0.0211. In our case, it's 0.033. We also, obviously, this is much different from your example. We are using 1.8 million claims. So it has been, the results are very much supported by a very large number of claims. So basically, this is just to tell you that the real data support your decision with the consents, which unfortunately I have found. Thank you very much, Corina.
Yes, please.
A question to Corina, because you mentioned the gender effect at the beginning. So did you test the gender effect? Because, you know, there is a very sexist prior knowledge that said that women are a bit more dangerous on frequency, but less dangerous on severity. It's a sexist and prior knowledge, but what does the data say? What do the data say on this topic?
We are actually currently working on that, and I think we chose the best country to check it. It's Saudi Arabia, because women there just started driving, and it's a very interesting market to see how to implement a correct pricing for a totally new population of drivers that have different characteristics in some sense. Yeah, so anecdotally, it's considered that women have anxiety driving. So the accidents are due to anxiety, where men due to anger.
In parking, I don't
Exactly. Yes, exactly.
Just a curiosity. Do you think that the hypothesis to have independence between the number of accidents and the severity is robust or not?
That's a very good question. I would. I don't know. I mean, I think
Oh, no,
it's a safe consideration because it's a large portfolio, but yeah, it would be interesting to introduce dependence. I mean, if you haven't had a claim, it means if I haven't had a
Well, a
claim
model could be.
for 5 years, you are more likely to have one than if. I think, yeah, I think behavior. Oh,
No, go. I will answer to it.
Because it's also the age that will change the dynamic. You haven't had the claim for 40 years, but now you are a bit more anxious. So maybe you have a claim. So.
Thank you. Yes, sorry. I missed the beginning of, was the question of the joint distribution on the frequency? Yes, exactly. I wrote the paper. What was my first research paper on at Stimbleton, and the result that there was almost no correlation. That's it.
We gained, oh, sorry.
If we link the premium increase to the severity of the claim, I fear that we can encourage some drivers to report some claims that today are not reported and are paid directly out of pocket. What do you think about?
Well, that's a good question, but I think this happens always, even now, when only the number of claims are. Yes, yes. Yes, it is possible. I think it's a risk we will need to take. Yes, well, Professor Fang has an answer.
Hi, Corina, thank you for the presentation. So, when you talk about the optimal bonus malus, right? So, my understanding that here is optimal in the sense of learning about the underlying risk and occurrence and the risk claims. But you also mentioned in the second slide, bonus malus is also plays a role in encouraging more careful driving, and that behavioral response of driving with respect to bonus malus system is related to some elasticities, right? So how individuals will react to these changes premiums in terms of their driving behavior. That part somehow is not in your analysis when you are doing the, we are focusing on the information kind of updating components, right? So once you take into account this moral hazard aspect, how would your system, accounting for the gender differences, be different?